Hello, everyone. Welcome back to the second installment of the Crypto My Money Show. My name is Martin Ronquillo, and I am joined by Joel Arteaga.
Hello, everyone.
We've been talking on and off this week on the topic of what is the market doing, where are we at, and what's up with inflation. Joel, what are your thoughts?
Uh, that
Loaded
really, I
question.
think, explains it. Yeah. So that's a very good topic, and I think inflation in specific is something that everyone's hearing about nowadays. The last report that came out with the government said that inflation went up by like 4%, and I think everyone's seeing it. From my immediate family to my friends, everyone is talking about prices of everything. Going up, how everything's more expensive, especially housing. Let's not get started with housing. But I think something that is on everyone's mind as well is that everyone thinks that 4% is not really. They don't feel like, and I personally also don't feel like it is a true inflation. I feel like it's more like 10% or so, and I think everyone else probably agrees with that. And there could be arguments either way of maybe the government not really taking into account a lot of the goods that should be taken into account when dealing with inflation, but. Definitely a hot topic nowadays with inflation. Me personally, I think it definitely is getting a little bit out of control, but depends who you ask.
Right. Well, where are you feeling it?
Personally, I'm feeling it on just the general day-to-day items. So groceries primarily, and then also when go out with friends to have drinks or coffee. I'm also seeing it there and feeling it there. But I think inflation overall though is varies from industry, from sector to sector. I think the one place where inflation is the highest is housing and the stock market.
Housing alone is up like 11 plus percent year over year, which is much higher than the consumer price index, which is reporting about 4.3% inflation. And what's interesting or wild about the consumer price index is it doesn't take housing into account quite as you would think it would, right? It's a survey, and it doesn't capture the actual like the increase in the housing price. So the consumer price and the consumer pricing index being at 4.3% doesn't do a whole lot when day to day the price of housing is going up, the price of energy is going up, and things left and right. And it's weird because it feels like it's a slow creep, but it's a slow creep that is getting faster.
Yes, exactly. It definitely feels like that. It definitely feels like prices are rising pretty fast, if you think about it. And I think we all know, or at least feel like we all understand why. Which, in my case, I feel like it's just the government is spending a lot of money, trying to what they call kickstart the economy after COVID, after the pandemic, but. Who knows? They think they can control it. They think they think this is expected. So we'll just have to wait and see. But you're definitely right, though. I definitely feel like the metrics that are used to measure inflation are a little bit outdated. 2020 is a lot different than the early 2000s. And, I'm not really sure when I guess the metrics were created or how often they get updated. Do you know?
I don't. I know that they've been updated several times in the recent decades. So the inflation that is reported now versus, like, say, back in the 70s when there was another period of high inflation, um, the index captures less of that inflation this time around. So one of the things that I heard somewhere this week in one of the videos that I was watching says that we actually have um, about similar levels of inflation as the great inflationary period of the 1970s. I didn't research that, so I'm not, Take that with a grain of salt, but that's what I've heard. But I mean, what's funky though is it's not just inflation. It just feels like the entire market is wonk. So I'm having trouble analyzing the market because it's not just the inflation. It's also like just seems like everything is off, and I can't quite put my finger on what.
Yes, exactly. I have that same feeling. I definitely feel like there's a lot of money out there. There's a lot of money out there. A lot of people with a lot of money, which which is really what's, in my opinion, what's driving up inflation. And I think, in the one place where we see it the most is going back to housing. It's also contributed to supply and demand. But with a lot more money out there, a lot of people are willing to bid more for that house. So what would you say would be the best way to hedge against inflation, to try to protect your assets, your money against inflation?
Yeah, so traditionally, having a lot of cash sitting around in the bank, say in a savings account, is the worst way. So let's just rule that off. I feel like for a lot of us, that would be the gut reaction. Is like, oh, I'm going to have more money in my savings account just in case, XYZ happens and the prices go up, whatever. But if that's your gut reaction, then you're swimming in the wrong direction because, let's say inflation is 10, 11% per year instead of the reported 4-ish percent. Then if you have your money in a savings account, that's, 10% of your money gone in a year, right? I think we touched on this briefly last week. There's risk in whatever asset you park your money in. If it's at the bank, it's, I guess, quote unquote safe-ish. It feels safe, but then you have the risk of inflation. So let's rule out cash. Traditionally, real estate has done pretty well through periods of inflation. That's probably the best bet, quite honestly. The stock market's done all right, at least keeps up with inflation. But I think real estate is if you're lucky enough to have gotten into real estate before things got wild at the end of last year, it's probably a good bet to hold on to your real estate for a while longer.
What about crypto? Let's get into the
Of
into the
course,
good
man.
topic of crypto.
My favorite
How,
topic. I was saving the best for last.
how, how
Yeah.
have you used, or how do you see crypto as a way of dealing with inflation, of hedging against inflation?
Yeah, so I think Bitcoin is your best bet there because it has that brand name recognition and it's coming to be seen as digital gold, as a store of value. And there's this idea out there, this mindset that it's not so much that the price of Bitcoin is going up, it's more that it's appreciating versus the currencies, the fiat currencies of the world. So comparing Bitcoin to the dollar, it's not so much that the value of Bitcoin is going up. I mean, it is in part because of supply and demand, but also that the US dollar is just losing its value. So it takes more dollars to buy one Bitcoin. A lot of you may remember that old story from like 2010, 2012, when somebody ordered pizza and paid with 700 Bitcoin, now worth several $100 million. That is what devaluation of a fiat will do. 1 year a dollar buys you XYZ, 2 years later the dollar buys you a little less. Of all the cryptocurrencies, I think Bitcoin is your best bet for a long-term store of value. As long as you don't focus on the short-term volatility. If you're looking at the short-term volatility, then that is going to scare you away. But the thing with Bitcoin is that if you're getting into it it has to be for the long haul. You can't just be in for a year or 2 years. You have to really believe that it's a store of value and it's going somewhere, and that enough people will see the same thing over the long haul, and that countries will start to do the same, and will adopt policies that are favorable for using Bitcoin as a digital alternative to gold. So for somebody that's new to cryptocurrencies, Bitcoin is definitely a great place to start. You're not going to get the crazy gains that you would with an alternative currency, but you're also going to have a lot more safety and stability in your portfolio because Bitcoin is a more established name. But I mean, if you compare Bitcoin to anything else, I think the only commodity that's done well in the past year is lumber. Bitcoin is in this long-term bull cycle with temporary bear cycles within that broader bull cycle. And I think we're still pretty early in the game where this thing has decades of appreciation to go.
Yeah, definitely. That's pretty interesting. And so to also kind of give a very brief background, the other, or I guess historically, the way or the asset that has been used to protect one's assets against inflation has been, gold and silver. That has seemed to always withstand the test of inflation over time. And so, you touched on Bitcoin, which now a lot of people think of it as being digital gold. So, that's also why I think for myself as well, I do think that, right now it's getting to the point where it will be very, very, very similar to gold in terms of its function as an asset. I mean, it's still has a way to go, and I also gotta say though, at this point too, though, we're speculating, and everyone in the market is also speculating that it will go that way. The signs right now are pointing to that, and it's starting to show more and more like Bitcoin could be that virtual gold, but only time will tell.
Right. The market needs something like Bitcoin because we've had nothing but manipulation in our markets and in banking. And Bitcoin is a network that is decentralized, and there isn't any centralized manipulation or control. Bitcoin has a fixed supply, and unless all the nodes vote to increase the supply will not increase. I don't think all the nodes would, or the majority of nodes would vote to increase the supply when people get into Bitcoin, specifically because it has a fixed supply of 21 million Bitcoin, right? So you contrast that to any fiat currency like the US dollar. The US dollar is being printed billions and billions a day at this point, right? Like what's the value of a dollar if it's being created out of thin air at a rate of billions per day, right? So Bitcoin, that's why Bitcoin has developed this brand as a digital gold equivalent or digital sibling of gold, because it has that fixed supply. So you aren't worried about central bankers printing more and more and more and more of that asset class, of that money, and over the long haul devaluing what you have, right? Like your actual purchasing power.
Right. And I think especially for myself as well, the one thing that was the hardest to wrap my head around with comparing it, to physical gold is the fact that Bitcoin is not physical unless you buy a wallet, a hardware wallet that you carry it around.
Yeah.
But even then, it's not like gold where you can physically see it and feel it.
Yeah.
At first, that was the one thing that was
Oh, go ahead.
I think at first that was the hardest thing for me to kind of try to wrap my head
Right.
around when trying to compare it. Because, well, let's say worst case scenario, right? Like shit hits the fan and, you know, we're out of, let's say, power, and worst case scenario, doomsday, right? You try to survive, and well, in that scenario, Bitcoin or crypto would be worthless because, well, there's no way to exchange that versus like gold, right? That's physical. In the worst case scenario, if you have the gold, then you would be able to exchange it. But then again, worst case scenario, nowadays, no one has the gold in their house. Nowadays, gold is stored somewhere where who knows where it's at.
Yeah, a lot of people that have gold exposure have paper gold. They buy like an ETF or something that is backed by gold, or they're buying paper gold on some sort of exchange, or they're buying the stock of a company that mines gold, something like that. So the reality is that a lot of gold people don't actually have large or significant quantities of gold on hand. I think there's a big divide between boomers and millennials, where the boomers only had gold as a major hedge against inflations or central bank shenanigans, and they're used to that. Whereas us millennials and Gen Z, we just naturally gravitate to gold because everything is already digital in our lives. So a lot of the arguments that I hear against Bitcoin acting as a digital gold come from people that are older, that are used to having gold, and oftentimes have a lot of gold on hand. So it seems like they have that bias where they want their asset class to do well. And I mean, who doesn't, right? But the thing is that if I, like, for me personally, if I find something better than Bitcoin, I'll go to that. Like, I love Bitcoin, but I'm not married to it. I just see it as being best asset class right now for what it is. And I think it's the fact that you can't see it is more of a feature than a bug. I think people attack it as, well, you can't see it, it's not real. No, I think that's a feature. Try to fly with some bars of gold. Like, you can't. They'll be confiscated. And if you somehow sneak them across countries, then you're a target for people wanting your gold, right? So like, that's the beauty of Bitcoin, is that anywhere in the world you go, as long as you have power, some sort of device, and internet, you have your wealth at your disposal.
And let's not mention that it would be a lot cheaper to move a large quantity of Bitcoin than of gold.
Oh,
If you
absolutely.
a lot cheaper. So
Yeah, you don't need an armored truck to move your Bitcoin around. All you need is some sort of device that is internet powered.
exactly. So what about the rest of the of crypto besides Bitcoin, like Ethereum, Cardano, all the rest? How do you see those? Do you see those as also potentially being used to protect oneself from inflation? They do tend to fluctuate, to be very volatile. I mean, they swing up and down within a day like crazy, but that could just be the fact that it's still fairly new and the market's still trying to adjust. I mean, the swings are very very wild, but at least for some, it's started to stabilize to some extent. So curious about your thoughts on that.
Yeah, I wouldn't necessarily use any altcoin as a hedge against inflation, specifically because they're speculation. It's not too different to invest in or buy Ethereum compared to invest in a cloud company, right? Like a new tech company on the stock market. I think there's there's comparison to be made there. Ethereum is a network that is working towards being a global computer with smart contract capabilities and the ability to tokenize digital assets or real assets in the digital world. So I think I think Ethereum is a decentralized version of a tech company. A lot of the altcoins, or probably a majority of them, are the same way. There are also utility tokens like the Binance coin or Celsius or the Voyager token, which are utility tokens that offer you benefits for their respective platforms. So there's different ways to invest depending on what you're looking for. So if you're specifically wanting to hedge against inflation, my opinion, not financial advice, is that you stick to Bitcoin. You have a certain percentage of your portfolio in Bitcoin as a hedge against inflation. And then if you want to invest in other digital assets, then have that allocation, but just keep your priorities straight, right? Like this is, this chunk is for hedging, and then the rest is for speculation. So you don't want to get the two mixed up, because what happens during a period of inflation like we're in right now is that asset prices go up. So speculation is rampant, and the prices go up. So even though Ethereum is growing faster in price wise than Bitcoin, Ethereum is speculative, whereas Bitcoin has that store of value ideology kind of wrapped around it. That is my view on the altcoin market. Now, as we discussed last week, you can put some of your money in stable coins. That would also be not necessarily a hedge against inflation, but at least a way to try to keep up with inflation. Rather than having all your savings in a bank account, you can put some of them into stable coins, and that will help you to sort of ride the inflationary wave.
So it'll be more of a long-term strategy, right? Not so much short-term strategy. Because short-term, it can fluctuate like we saw last week, right? Of Bitcoin losing a large portion of its value. But long-term, I'm very bullish that it will not only recover, but continue to increase, continue to go be up.
Yeah, if you're scared of Bitcoin, just look where it was a year ago. It was, I don't know, like $7,000. Now it's fluctuating between 35 and 40 last time I checked. So short term, yes, you prepare for it, but you shouldn't be looking at your Bitcoin holdings every day anyway if you're holding it with a long-term inflation hedge mentality.
Which is actually kind of like the actual price of gold too, right? Short term, it fluctuates, it goes up and down. But long term, it's just been going up. If you look at the trends.
Yeah, exactly. Going back to what we were talking about earlier, you can look at Bitcoin, the price of Bitcoin, two ways. One, it's appreciating due to supply and demand, and that's part of what's going on. But then also the fact that there are more dollars circulating in the world, so the value of each dollar goes down, which means that it takes more dollars to buy one Bitcoin.
Exactly. And so something that came up on the news very recently, I think within 24 hours, is that El Salvador may be the first country to actually recognize Bitcoin as a legal tender in their country.
Yeah, I saw that.
So it'll be interesting to see if that helps them with inflation. I think that'll be a pretty good case study by itself.
Right. Last week we were talking about game theory, and we said it's just a matter of time before countries start to embrace Bitcoin. I think this is that first domino that's falling. Right now, it's a bill, right? So it's not law, but how long is it going to take before other countries start to do that? And it's going to come from small countries, like countries like the U.S., Canada, Australia, the old brands, the big countries. They move very slowly, and there's a lot of polarization right now, so it's hard for countries like the U.S. to move quickly. So we're going to see a lot of this coming from small countries, and it's the small countries, developing countries, that would most benefit from cryptocurrencies and digital assets anyway.
Exactly. I'm pretty excited to see how it plays out. Rooting for the best. But I definitely think, though, that just the nature, the makeup of Bitcoin itself, it's definitely going to be a good decision, especially for a small country that has always struggled with inflation specifically.
So something that is good to keep in mind is that it doesn't matter what the market's doing. If you are determined enough and looking carefully enough, you'll always find ways to actually benefit from the situation. So just because the prices are going up, and we're seeing inflation in the price of our food and cars and housing and all that, doesn't mean that it's all rain. There's a lot of ways to play inflation if you understand the basics of what's going on and how the market works, all those sorts of things. So the strategies that we've talked today of holding real estate, if you have real estate, or using Bitcoin as a hedge against inflation, putting part of savings into stablecoins, all those things can help you actually benefit from inflation. You just have to keep in mind that, like say for example, if your house has gone up 20% in the past year, it's not so much that you're that much richer. It's just that you're keeping up with the inflation. So it takes more dollars to maintain that purchasing power from a year or 2 years ago, right? So a lot of people are feeling rich right now because they're seeing the value of their homes go up on Zillow or whatever. But it's not like necessarily that they're richer. You're just keeping up with inflation. So you still want to be careful. You don't want to run wild and do something stupid because you feel like you're richer this year over last year. At the end of the day, nobody knows what's going on. I've been watching a lot of content and reading a lot of articles trying to make sense of it. Some people think disinflation is transitory, as the Federal Reserve is reporting. Other people think it's here to stay. We just don't know. What's something that I read that is crazy though is that in April or May, the average price of a car reached its all-time high of $38,000, which is wild because, back when we were growing up, you could buy a really nice car, a brand new car for well under $20,000. I mean, like entry-level cars were, say, $12,000, and something a little better was 16, 17,000. Trucks, SUVs were, mid to high 20s. And now somebody wanting to buy an SUV has to get into a loan of $38,000, $40,000, $45,000, $50,000.
That is definitely pretty crazy. Do you think a lot of this has to do with the stimulus checks? Not to get too political here, but it does seem that did put a lot of cash out there in the economy, and it does almost seem like also that has something to do with it.
Yeah, our market is full of moral hazards because in 2008, the banks that caused the mess were bailed out, right? So in essence, they were given loans by the Federal Reserve. So money was printed and given to them. They were essentially rewarded for destroying our market, which is not great, right? Like that, it just doesn't send a good signal to the market because that is inviting all these crazy folks that want to make a ton of money by doing crazy leveraging to do it because they don't see any risk, right? If you mess up, then the daddy Federal Reserve comes in and bails you out. So most of the money printing has been going towards institutions and banks. So it doesn't really trickle down, as they say, right? It just kind of stays in the banking system. So we didn't see crazy inflation in 2008, even though there was a lot of quantitative easing. This time around, as you said, stimulus checks have gone out. So a lot of the money printing hasn't been just for the banks. A lot of it has been also for everyday folks like you and I. And having more money at the hands of all of us then means that we're grasping for more day-to-day items. We're purchasing more consumer electronics. We have more confidence. That's why car sales rebounded in September. And that's also why housing has gone up and stocks. So, I think that the stimulus checks were well intended, but this is one of the consequences of injecting all this new money into the system.
Which I think also goes to show that if you give money to the average person, they will spend it, versus if you give it to the banks, to big institutions, they are more likely to just hold on to it and try to try to maximize it however they can, which would be in the form of like investment or just holding on to it for the right opportunity.
Yeah, so generally when banks are bailed out or when they're given loans by the Federal Reserve, they don't actually create a lot of new loans. They take that money, replenish their reserves, and then that's about it. So it really is daddy Federal Reserve bailing out the kids. Doesn't do a whole lot, right? Because there's like in theory they would create new loans, which would allow businesses to take out loans or to use their lines of credit to then revamp their operations or perform construction, whatever capital is needed for. So in theory it would work, but in reality, when banks are in a crunch, they take that money and they keep it. Whereas everyday folks like you and I, we have needs. We have bills to pay and things that we want to buy and all those things. So an extra $1,200 is really helpful, and that money probably isn't going to stay in a savings account.
Exactly. People are going to spend when they have money and when they feel like they have a lot of money, and I think that's one of the things that the stimulus program did. It made people feel like they had this extra cash that they had to go out there and spend, which led to a lot of people going for the nice things like cars, which is probably what's driving the price up. And then it almost makes me think though that maybe even car companies saw that coming and they intentionally raised the prices because they saw that now people had more money. So it could have been also that
Yeah,
could have also played a
I
part.
heard that car manufacturers are making a lot more money. Their margins are up, even though there are shortages. Their margins are up, and the thing with prices going up is it's hard for them to come down once they're up. It's hard to fight that momentum. So I think these raising prices or increases in prices are here to stay, even if in the grand scheme of things, inflation does turn out to be transitory, as the Federal Reserve is saying. We're not going to go back down to where the average car sold is 34,000. I think that trend is just going to continue upwards. And what's crazy is that now these the prices of cars are on the rise, but due to component shortages, they're actually substituting parts or removing packages. So even though the average price is going up, you're getting less for what you're buying.
So you mentioned that the government feels like this will pass, right? Like the increase in inflation is going to be temporary, and then it's going to kind of
Yeah,
stabilize
with the Federal Reserve, which is
the
not
Federal
federal.
Reserve.
Yeah,
Very easy to get the both confused there.
yeah,
Uh,
that is. I think that's by design.
It is, and I think to give a little background too, I mean, the whole system was made to be complex, right? Like this is something that they don't teach in school. The whole systems and inner workings, especially for myself. You always hear of the government's printing more money. The government, is printing more money, but that's about it. There's not a whole lot of details being given, and not a whole lot of people understand that or how that works, because by its nature, it's meant to be complicated, right? If it was pretty easy, someone could go in there and start questioning it and start asking for answers. Versus if it's very complicated, you can start asking questions and you'll get a very complicated answer. And you won't know what to do with it.
Yeah, and it's a lot for the central bankers. Is very smooth for them operating in under this umbrella of we're the government, or the public perceives us to be the government, right? Because then people just blame the government. People always blame the government anyway. So central bankers operate pretty smoothly under this umbrella of perception, where people think that they're the government. They're not. They're not elected. They are a private entity acting as a quasi-government entity, and they're the ones that are running, to a good degree, our market. Like, let that sink in for a moment. Like, how, like, is that in the best interests of me or you or your family or my family or the general public?
I would say no. Their best interest is on making more money. because
Yeah,
it's essentially, since at its very core, it's a private entity, almost like a business, and the
it is.
main function of a business is to make money, right? Give the stakeholders a return. They're always going to be thinking about that. How can we get a good return, a decent return? That's going to be their main goal, not so much what's the best interest for the general public.
Exactly.
So for someone that doesn't have a whole lot of knowledge on this, how would you explain the inner workings of this in simple terms?
It's a Ponzi scheme. The thing with fiat currencies is that it's debt based, so you have to create debt to create flow of capital. It's the reason why the banks are fractional reserve institutions, right? Like they only have a fraction of their assets compared to their loans, and they make loans by creating by underwriting loans. They're essentially creating supply of money right out of thin air. So by its very nature, you need inflation in this system, which means that you always have to have just more money, more money, more money. It's like a Ponzi scheme, right? You take from investor A, and then you bring in investor B. You use investors A money to pay investor B, and then you kind of have to have, or actually the other way around. You use investor B's money to pay investor A, and then you have to bring in investor C to pay investor B, and then to yield more return for investor A. It's that same thing, just at a broad scale. So it's in the nature of central banks to debase their currency. So what we're seeing here is nothing new. It's happened time and time again. And history is very clear on this. Anytime a central bank or a government controls the money supply, they debase it to the point where it's worthless. And you always have to have that printing of money to keep the system going, right? So that's why people say it's a Ponzi scheme.
And this is where also gold comes into the picture, right? Governments or even banks can't print more gold, so that's why gold over history has been able to be used as something to hedge against inflation. And that's also going back now to Bitcoin, of why Bitcoin can be created out of thin air by any one person.
In summary, this topic is vast, and we can debate it or talk about it day in, day out. Each of us needs to do what we feel comfortable with. I definitely think that you want to minimize your debt, especially if it's debt that is not backed by an asset. So, like as an example, if you have credit card debt, it's a good idea to minimize that credit card debt. Your mortgage, that's okay because you're actually benefiting from inflation. The value of the underlying asset, which is your home, is going up, and the value of each dollar is going down. So the inflation and the debasement of the currency is actually eroding away your debt. So minimize debt that is not backed by an asset or that is not being used to buy an asset. Don't over leverage yourself. Have cash on hand, preferably like say a stable coin or some cash equivalent that is earning more interest than a savings account. Look into Bitcoin, and if you're in real estate, then that is also helpful as well.
Great summary. I would also add to that by saying that the value, the purchasing power of the dollar is going down. As time progresses, and that's something that even I'm feeling quite a bit. So always thinking on how can you protect yourself against that, which I think looking more and educating oneself into crypto like Bitcoin or any other assets that you mentioned, Martin, would be a good option for that.
Yeah, absolutely. And I'm sure this is going to be a lingering topic, and we'll touch on it time and time again.
Until then, everyone have a good rest of your day, morning, evening, whatever time you're watching this, and we'll see you next time.
Yep. Till next time.